Hello everyone, welcome to another video, and in this one, as per the comment section, I am scamming. Okay, well, get ready to witness a new scam. And today's scam is going to be about how you can catch the high or low of the day without using ICT. Haha, yeah, you're going to be using my concepts. Yes, mine. Okay, so we're going to break this down into 5 parts. I know you see 4 parts only. So we're going to use a simple framework, what you will learn, why you will need this, when you will use this, and how you will use this. Okay, we're going to break it down step by step so that you can pause the video, then write it down, you can think a bit, and then we can go and take a look at some chart examples. And in this video, we are only going to be looking at catching the high or low of the day. Okay, and the rest is of course going to be in my one-on-one and also in the video course. So the video course, the only condition is that enough of you must join for me to actually release the bonus lecture on how you can catch the high and low of every session. All right. Now, let's take a look at what you will learn. Okay. Quite small, right? That's the point. All this space over here is my blackboard. Okay. Now think about this. Okay. Give me 1 second. Let me just exit full screen. Okay. Now, let's think about something. You'll be learning to nail the high or low of the day, while also being able to understand the limits of the daily range. Okay, you'll also be able to understand the limits of the daily range. And as you know, as per the chart over here, you can see that a bullish candle is going to be an open, low, high, close, while a bearish candle is going to be an open, high, low, close, right? So what you are doing, right, is if you are bullish, let's say you get the bullish prediction, yep, you're going to be able to use whatever's over here to understand the limits of the daily range in the buy side. So instead of sticking to 1 hour, 2 hour, 3 hour, you can simply position yourself down over here or anywhere in between, and you can target these levels. Whereas if you are bearish, then same thing, opposite. Okay, you can target levels down over there because that is where the higher, basically that is where the opposite end of the daily range is going to form. Okay. Now, in order to be able to understand and deeply appreciate what I'm telling you, okay, and again, I'm directing this to the only people that are, actually listening, to the people that are willing to shut their mouths and listen and learn, not people that think that they are bigger than the other person, right? As per that's like 99% of the people that comment on everyone's videos, right? So close-minded idiots, right? So I want you to be open-minded. I want you to take this in, absorb the value, and backtest, because you're not going to get anywhere if you don't backtest, right? Your output, the output that you gain is only as good as the input that you put in. Okay, think about that. The output that you gain is only as good as the input that you put in. Okay, so you need to really understand my power of 6 framework. Let's take a look at why. Now, why do you need this? Number one, you want to prevent selling when the market is buying. Let's say that price is, trending up, and a lot of the people, especially in the SMC community, you want to catch the sell, London sell, let's say. But London just keeps on pumping by giving a retracement only, and it keeps on going up. But that is because the daily limit for the sell is all the way up there. Okay, and you know that by understanding the price points that you're using to project the high and low of the day. So you want to sell only when the market is primed to sell, only when it reaches a certain level. Okay. Likewise, some of you might want to. So what I just showed you was this one, the prevent buying when the market is selling. Actually, prevent selling when the market is buying. So people that buy when the market is selling, so they're trying to buy, fail, buy, fail, buy, fail. And then when they give up, wow, up it goes. Right. That's because the low of the day is already predetermined to be here or somewhere here, because sometimes prices jabs it a bit more and then only reverses, right? So it is crucial to understand that by understanding this framework that I'm about to teach you, or this concept that I'm about to teach you, it will prevent you from selling when the market is buying and buying when the market is selling. Okay. And now you'll also be able to understand when continuations are more likely than reversals, meaning to say that instead of falling into the trap that you see over here, okay, you can take the retracement and you can keep on buying until price reaches a certain point. Likewise, you can take the retracement and keep on selling until price reaches a certain point. So you'll be able to understand when you can take a continuation, and then at the same time, you will understand, as for the last point, you'll be able to understand when the market is primed for a reversal. There's certain levels for that. Okay. So that is why you will actually need this concept in order to be successful. Okay, in order to be successful in determining whether a high or low is going to be put or not. Right? Let's look at when. When will you use this? So you will use this during the sessions to judge whether it's going to be a continuation or a reversal. So basically, London and the New York session, you do not want to be touching the Asian session. Okay. So this way you will be able to understand if it is a London reversal or a London continuation, which the New York characteristic is dependent on. So what do I mean by that? What do I mean by this final point? The New York characteristic is dependent on. Well, if London reverses, then the New York session is most likely going to retrace and continue, right? Sometimes when London continues, then the New York session is going to be a reversal, right? So that is something you have to understand. The end depends on the beginning. The London session or the New York session depends on the London session. Okay, that is a crucial relationship to understand. It might be basic knowledge, it might be obvious, but for some of you, it may not be that obvious. Okay. Okay, how are we going to do this? How will you use this approach? So you're going to use the power of 6 and you're going to measure the true structure of the manipulated range on the highest time frame in which that structure is visible. Now, when I say highest time frame, sometimes it's visible from all the way from the M5 all the way to H1. Okay, but you are going to keep it within M1 to M15 intraday. Okay, intraday. And then you are going to use H1 and above for weekly expansions. Now, I'm not going to teach you the weekly expansion. You should be able to deduce how to use this by learning how we use it intraday. Okay, so you want to be measuring the structure that occurs within the manipulation phase. So you know that we can divide everything by 6, right? So 1, 2, 3, 4, 5, and 6. So let's say this is M. Okay, so you want to be measuring the structure from the 5 minute, 1 minute all the way to the 15 minute. And that is going to give you your projection for the, let's say, in this case, the high of the day. Okay, and you'll be focusing on 3 standard deviations and 5 standard deviations to judge the limits of the day. You are not going to be using 2, you're not going to be using 4. Yes, you can use 2, but that's for session stuff. But you're not also going to be using 4 because what the hell is that? 4 is not, does not make sense as usual, as you know by now, right? You're going to be using the following. You're going to be using 1, 3, and 5. 3 standard deviations and 5 standard deviations. You will see that price will form the high or low either at 3 or either at 5. What must be, so what must price have? What's the characteristic that price must go into or must exhibit in order to reverse from these points? Higher time frame, POI. So it's black and white over here. It's black and white. If it's 3, then at that 3 level, you're going to find a POI. If it's 5, then at that level, you're going to find a POI. Simple. If it's not there, then if it's not there at 3, then it's going to go all the way to 5. Maybe if it's not exactly at 5, it will just go a bit more and then reverse. Okay. Now, the session-based approach, as I mentioned earlier, can only be found in my one-on-one. And of course, my video course, which is also conditional. The video course is conditional to only if a handful of people join, right? So in the video course, you will also be getting the bias predictions for all sessions Average success rate is around 80 to 85%, sometimes 70, but most of the time it's 80 to 85%. So your strike rate with the teachings that I'm going to give you in the video course should keep you at that 80 to 90% strike rate. Get maximum, get funded, get your payouts, and then let people know how I scammed you into success. All right. Okay. Now let's take a look at this. Let's take a look at a few examples. Okay, let's take a look at a few examples. So what we're going to do is we are going to head into the charts. Okay, we're going to head into the charts and let's take a look at a few examples. Now, I have gone ahead and done the examples for you, but I will break it down again, right? So from here, right? So first of all, what you'll do is you will divide everything by 6, like so. Okay, we'll divide everything by 6. So what you can see over here is this is actually an accumulation. It's not a manipulation. Why? Look, can you see any SMT divergence over here? No, right? Can you see one over here? Yeah. So if this is accumulation, so if this is accumulation, this is manipulation, this is distribution. But granted that the manipulation happened just a bit late. Okay, just a bit late. So this manipulation, if we just think about it in terms of where it happened, we can see what? See this? There? That's the manipulation, right? So yes, from here it's there. There, can you see that here? It's there, right? The manipulation completed itself around here. So you're taking this structure, the highest time frame structure that was broken. So this is a 15-minute chart, and you don't want to go more than that, right? And then you're going to project it forward. So if you take a buy, let's say here, you want to partial at 3 standard deviations, full TP at 6 at 5. Okay, right? 6. It shows 4 and 6 because there's one over here, right? So 3 standard deviations and 5 standard deviations. But you can see that price is going even more. Okay, that's because of high impact news drivers. Because when you have high impact news drivers, that is when you want to start relying on the weekly projection for the weekly high or weekly low. So it's the same approach. You find the weekly SMT. So let's see. Let's see over here. There you go. Here, right? That's the SMT. So you're going to use that structure on the 1 hour, on the 30 minute, on the 4 hour, right? And you will see that if I take you here, you will see that if I just jump to the 1 hour, see this structure here. I go to the 4 hour. See now, let's play it. Okay, that's the structure, high swing high, right? So we'll take this swing high, this swing low, right? And we can see that here's 5 standard deviations over there. So if I just go back now to the 15-minute chart, while keeping this available to us, and just go back to where all the price action is, right? You can see that we already went 3, and the next step is 5. Okay, so granted that in between, because this is a weekly expansion, right? In between, of course, you're going to see price go down a bit and then go up, go down a bit and then go up. While this is your final target for the weekly expansion. Okay, that's your final target for the weekly expansion. So Bitcoin is from Sunday to Sunday. This objective is not yet done. Okay, this objective is not yet finished. So now that is why this went more than that, because this is part of the weekly expansion. Okay, now let's take a look at the next one. So over here, right there, there's a manipulation here, very small manipulation. So this is your manipulation, distribution, accumulation, right? Distribution, manipulation. Okay, manipulation. So we understood that over here there is a time distortion. So that's a time distortion. But we are focused on this first manipulation. So this first manipulation, right? This is the 15-minute chart, so that's as high as I'm going to go for this, right? And you can see that this swing low made this swing high. So that's the range that you're using. And price will then proceed to form the opposite end of the daily range, either here or here. In this case, here. Okay. It went up again. That's okay. We are still using this. So you can take this advantage. You can take advantage of this. You can go short until here. Okay. You can go short until that. Next. Over here, we have SMT divergence. Let's see if we have or not. Yeah, see, look at this. Low, low, higher, low, 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 low. That is SMT, right? So that is a manipulation. So this manipulation, where we came to the highest time frame in which this structure is available, so 15-minute chart, and we broke above it and closed. Good. So we go 3 standard deviations, 5 standard deviations. That's the high of the day. You see? There. So in this case, as per the notes I gave you all earlier in the notion, you all can see that, okay, if I understand that this is the limit, and if I'm bearish at any point, I'm going to be bearish from here. So meaning that, okay, London, I can position myself as a continuation. New York session also continuation, and then from here, I can take any sell idea. Okay. Now, there are ways, of course, to judge this one. There are ways to judge this one. That is not in the scope of the free teachers. Okay. Then let's take a look at today. Today, we have manipulation here. Can you see? See that? There? Okay, that's the SMT, right? So we'll take the highest time frame, which is the 15-minute chart. Here we closed above. This candlestick high made this candlestick low. 3 standard deviations. Okay, 3 standard deviations. Did price actually hit it though? See this. Did price hit it here? No. Saw that? Nah, not even close. Right. So what will price do then? It will try to attempt to hit that and then go down. Okay. And if it trades through that, then we're going to go all the way to 5 standard deviations. Okay. So in this case, this job is unfinished. So this is unfinished business. All right. This here, what you're seeing, this one is of course unfinished business. Okay. It's unfinished business. So now we can take this one step further and let's say, for example, let's say we are looking at gold. Okay. So on gold, yesterday, which is on Friday, I took a sell over here, as you all saw in the other video, and went down. I got hit at stop loss. It's okay. So that is because I forgot to take into consideration this. Check this out. We had SMT down here. So that's the manipulation. 15-minute chart right there. Where is the body closure here? See, no body closure unless there is. See, body closure above this candle? No. So now if I go to the 1 hour, right? If I go to the 1 hour, and if I go 30-minute, can I see this now? See, yeah. Can you see the body closure? Yeah. If you can't find the 15-minute body closure, maximum permission is 30 minutes. Okay. Otherwise, impossible. So if you take this, right? Can you see that? Can you see that? Perfection. All right, so let's take a look again. Let's take a look at something else. Maybe on gold, let's say here. These are the initial phases of these last few days were manipulation. So that's why. Okay, so Let's go to the 15-minute chart and see if they are visible on the 15-minute chart first before we make a decision. Right? Yes, it is, right? Is it? Yes. So if you take this, wow, that here, this is CPI day. So manipulation happened everywhere. So initially, initially the manipulation for this day on this particular day was here. Okay. No, it was manipulation. Yeah, it was here. It was here. Okay. So if we take a look at this, can you see price did not close above, right? So it's going to be difficult. So we check the 30-minute chart maximum 30 minutes. Okay, maximum 30 minutes. You do not have to use it unless you are forced to use it. So on the 30-minute chart, the only price point that we closed above of, right, is this. Now see how we have that, right? So this candle itself made its own low. So we are going to take that candle and we are going to project it. Yeah. Now in this case, we can see that wow, it goes there, it just goes a bit more and then drops. Right. And it meanders around that level. Yes. Okay, so it just jabs a bit more. Okay. Now, if we take the previous day, 15-minute chart, highest time frame, okay, 15-minute, high to low. Can you see how we go up? And then the high of day essentially forms around this level here. Right? Forms around this level only. Okay, now this over here is suggesting that we have SMT divergence. We stop here. We can frame some cells and then price is ends the day because by 12 o'clock we are done with gold. We are not dabbling with gold after 12. After 12, it's like okay, irrelevant to us. So then let's say here on this day, here, if you took this, see that how price stops. That's the limit of the day. That's the limit. And you can see it just gave us this full on reversal. Okay. Then on this day, can I see any point in which I can use this? No, I must determine what the manipulation was. Right. So I'll let you do that. Now, if price went all the way up there, and let's say that okay, today we are looking for a bearish day. Okay. Highest time frame in which this structure is visible, right? It's going to be see this candlestick low made this candlestick high, right? So if you take this and do that, price doesn't stop, keeps on going. So if you take the swing low, so three standard deviations, we get the stoppage, and then the intraday deviations play the part. Played the part. Okay, it played the part. So that would be it, right? So I hope you found this insightful. Let's take a look at Bitcoin one more time. Here maybe? No, here, here. Yeah. So Bitcoin, ran you guys through this entire thing. Okay. That's the manipulation. Here is the deviation, right there. Okay. If you look at the 5-minute chart, let's say you want to look at the 5-minute chart. Let's say, okay, on the 5-minute chart, Sean, I'm seeing something different. Well, I said, look at the highest time frame in which that structure is visible. On the 15-minute chart, this was that high. On the 5-minute chart, the swing high is this. Now, if you take the swing high and if you compare, wow, it's perfect. Right. So I would be focused on the swing structure, like how I showed you the other one as well. Okay, swing structure. Right. So that's it. I hope you found this insightful. Okay. Video course is available down in the description below. And what else? Yeah, I hope you enjoyed this camp of learning the high and low of the day in a scary, precise way. Scarily precise way, let's say. Okay. Please do let me know in the comment section below what you thought of this video. I don't want to hear bullshit about, oh, nothing new under the sun. Okay, then go F yourself, man. If it's nothing new under the sun, then why are you watching my shit, bro? I mean, given that I am the creator and the author of all time division concepts. Yes, you will only know this if you join my one-on-one. I'll show you all the receipts from 2021 and 2022. So with that said, good luck and good trading. I'll see you in the next one. Bye-bye.